Time now for the business news and of course the big economic news of the day coming out of the US, where a truce in the brewing trade war between the US and China has been announced. Brian Quinn is with us in studio to tell us more. Brian, so a white flag then being raised in those trade tariffs.
Yeah, you could definitely say that. Days of negotiations in Washington between China's vice premier and American trade officials have apparently resulted in a breakthrough. U.S. Treasury Secretary Steve Mnuchin says the trade war is, quote, on hold as the countries agreed to forgo punitive tariffs on one another's imports. Well, key for the Trump administration is reducing America's $335 billion annual trade deficit with China. Clément Bonnereau reports.
Handshake after 2 days of intense negotiations. The US and China say they've avoided a trade war.
The two sides have reached a consensus, will not fight a trade war, and will stop increasing tariffs on each other.
The deal comes amid months of tensions between the world's two largest economies. The talks were aimed at persuading China to buy $200 billion worth of US goods and services to reduce the trade imbalance between the two countries. The US has a $335 billion annual trade deficit with China and has accused Beijing of unfair practices. Under the deal, China agrees to buy more US goods and services in the future. However, it's unclear whether it will meet the $200 billion target set by the US. Treasury Secretary Steven Mnuchin said specific targets will not be disclosed, but confirms there would be a, quote, very big increase in Chinese purchases of US agricultural supplies, as well as a potential doubling of energy purchases.
We have a very good framework agreement that's not just about buying goods. It's about structural changes. It's about lowering tariffs. China has committed to lower tariffs on many things and make structural changes and protect our technology. So these are very important issues for the U.S. economy.
Beijing also said the new cooperation would extend to medical care, high-tech products and finance. Both sides have agreed to hold further talks to flesh out details.
Well, that news of a trade war being headed off clearly buoying Asian markets, all major indexes in positive territory in Monday trading. Chinese markets in particular are seeing the benefit, no surprise there. We see the Shanghai Composite up around 0.7%. Hong Kong's Hang Seng up over 1%. Oil prices also continuing their recent rally, with Brent crude once again inching towards that $80 mark. Traders breathing a sigh of relief as global growth is less likely to be threatened by a trade war. A couple other factors at work as well, though. Earlier we spoke to Stephen Innes. He's head of trading Asia at Owanda about just that.
Yeah, oil's actually picked up a little bit of steam based on the fact that this will probably lead not to dent the global growth narrative. So they're picking up a little bit of support from there. But I think the underlying supply dynamics are continuing to underpin prices. Still a bit of the Iranian situation and obviously the Venezuelan sanctions that have been in the news with the election on. That continues to drive oil prices. And we think that the oil prices are going to remain firm throughout the remainder of the session and throughout the rest of the week.
A French supermarket giant Carrefour is set to close 227 stores across the country by summer. The chain is focusing on small local outlets, which it says are not profitable enough. Carrefour has been looking for buyers for the urban locations, with only a few dozen managed to be sold off. Now 2,100 jobs are on the chopping block. Unions accuse the group of putting its shareholders ahead of its employees. Carrefour management says it's doing everything it can to ensure that those employees land on their feet.
Today we have 76 offers that have already been accepted, 240 that are in the process of being negotiated, and we're working with the entirety of our employees, all of whom should have at least 3 job offers by the summer.
Well, finally for business, it's peak apéro season here in France. The apéro, of course, being the traditional after-work cocktail and snack time that essentially replaces dinner for some of us. Well, some troubling news on that front, however, as France could be facing a shortage of rosé wine this summer. Bad weather led to record low harvests in 2017. This as demand has been rising. Rosé is extremely popular here in France, the average adult consuming roughly 20 bottles per year. Exports are skyrocketing as well, having risen 6-fold in the last 10 years. The upshot, France's 2.4 billion liters of rosé may not be enough this year. I'll tell you, Eve, I've already begun my hoarding. I don't know about you.
Yeah, good plan. No, I wasn't as up to date as you on that business news, but I will start on my way home from here, Brian. Thanks a lot, Brian, for that business update.